ICT Mentorship, June 2nd, 2021. All right, so we are looking at the daily dollar index. We had that run back up into this old high, as I mentioned, hit that rather nicely. Sold off on Monday, hit the old low here, swept it just a little bit, came back up, then hit the order block, which is now, this is permissible. So now we have again what I outlined here, from here to here to here, reaching back to that old high. That's optimal trade entry. It's reaching back into a short-term premium market and then sold off. We have done the same thing here, from high to low to high and returning back to the bearish order block. So this is a reclaimed order block now. We had a nice intraday withdrawal from that level, and I want to see if it wants to make an attempt to drive down in here. It might require non-farm payroll numbers to do that. So we'll see what we get in regards to that on Friday. It's moving on into the hourly chart here. Again, you can see the run up into that institutional order flow entry drill on the daily. Broke down, traded into a fair value gap here for the hourly chart. Runs all the way back up to the daily bearish order block and into institutional order flow entry drill there. This is a fair value gap. The discount low traded to or just above is institutional order flow. It breaks lower and trades right back inside of the SIBI here. Okay, so we do have a small little fair value gap right in there. Might want to reach back up into that overnight. Notice that we have a gap here and a gap here. So in that instance, it could just simply be a run back to this old high, matching it, or just one pip above or so, and then rolling lower. That's what I would like to see. 15-minute time frame on the dollar index. Again, you can see how the market trades right back up into that old daily bearish order block and institutional order flow entry drill here, and it occurs at New York Open. So we have a market reversal profile hitting that premium array after taking buy side liquidity, resting above these relative equal highs over here. So we have a market maker sell model, and we have sell side liquidity resting below here. Small little imbalance there. I like this volume imbalance there. I like that as a near-term draw before non-farm payroll. I like to see that traded too. I think this lower may be completely done away with for non-farm payroll. So I'm kind of like forecasting a little bit, but just bear in mind that I'm not trading non-farm payroll. I'm just including it here as a, I guess it's an afterthought after looking at the chart here. You know, what am I considering and what might be panning out? That is pretty much what I'm expecting, because ultimately this is the original consolidation, breaks above, returns the original consolidation, then rallies up, smart money reversal. No low risk sell near the high. It broke aggressive there. I like that. I like to see that aggressive sell off in here, because to me it indicates that it's heavy. This market's heavy. It couldn't find a reason to stay up here for a long period of time. It offered a real quick repricing on the lower side, and we still have this sell side liquidity here that may result in the next drive lower. Now, with that being the case, if we drop down there first, then we might come back up, go into this area here, create another short-term overbought, and then sell off. I'd rather see it trade up first, leave this here first, go higher into here, and then sell off. And not that it needs to come up here, but I'd like to see it make an attempt to do so, and then reject that and go lower. Hitting the sell side liquidity first without coming back up into here, to me, just sets the stage for a run, break lower, retail gets caught short, then they run it, stop them out, and then rolls in the direction we're looking for. So it's a narrative thing I'm including here. Euro dollar daily chart. Again, we did not get down to that oversold condition that would have been matched with the overbought condition in the dollar index. We rallied up. To me, it looks like it might, depending upon what we get on non-farm payroll, it might want to take a run above the short-term high and then pop through here. I felt originally, if we could get down below and trade in the south side of this fair value gap, then this high would be intact for 2 to 3 weeks. The fact that we did not get down here changes that whole idea, because it was showing SMT divergence as I outlined in the previous discussion. So the return back into that range, high, low, we went to a premium, sold off a little bit intraday today, but it has climbed back pretty respectably. So I'm thinking that we may be consolidating and then having a non-farm payroll event that could send us above these highs here. We do have low resistance liquidity run signatures, with this high being lower than this. So it certainly looks like it could potentially mount a run up there and then potentially trade up into the rejection block here and then be in contention for the higher high. Euro dollar hourly chart. See the bullish order block down here. Last 3 down close candles. That's the range here. You can see I'm respecting that there beautifully. Comes off of that after taking sell side liquidity. Rally back up into the fair value gap here, leaving the buy side liquidity. This run here is going to be the teaching for this video. And you've seen the recording from the entry and stop management and first partial when it got up to here. But I'll give you a little bit more detail and also flesh out some psychological aspects to trading and what you may have looked at if you were seeing that video, what you would be feeling, what you were maybe considering as a potential fear factor and concern had you have taken that same trade. And we have this sell side imbalance, buy side inefficiency, trades back up into that, which is also inside of this down close candle right here prior to this run up here. So that's a breaker. We went lower, traded back up into the bearish breaker, rebalanced the SIBI, distribution to the downside, attacked sell side liquidity, filled in the buy side imbalance, sell side inefficiency here, and rallied back up in. All of this area in here, they retraded back to. I think that if we can mount another run here, this area here and then this level here, I want to see it kind of like ignore the bearish breaker now. We've had a nice reaction there, but now I want to see it overtake it, incline to the upside, and then make an attempt to go back to that buy side liquidity. So many people want to sell short this euro. They think it's topped. I'm not convinced yet, and this is the reason why I tell you I would be more inclined to be a buyer than seller. Not to say or diminish the significance of this sell-off, because that really was a nice sell-off, but I'm not needing to be a part of that. And because I'm teaching you the high probability side of things, that means trading in higher time frame order flow. I'd rather be a buyer, and even though this run from here up to here is smaller in terms of magnitude from here to here versus from a short from here down to there. And one of the things that you're going to be met with as a trader is you're going to see certain moves and you're going to feel pretty good that you did as well as you did in the trades that you were part of. But then other moves will happen that you are not participating in. And you may or may not anticipate these moves coming. But that tug of war that takes place inside your mind saying, yeah, but this trade, while it was profitable and it was good and it was precision oriented, it wasn't as good or as large in magnitude as that other trade that formed after my trade. Or maybe your trade was part of a larger move that you didn't really hold on to. And you're going to have to wrestle with those things. And that's normal. Everyone does that. And that's why you're really technically not right. And one of the major reasons why I teach this concept of trading without the necessity of being right. That means taking partials. That means staying on one side of the marketplace and letting the other side have its cake. In other words, all these short sell-offs here, let the bears have some of that. It's fine. I want to be able to sleep at night. I want you to be able to sleep at night knowing that what you're doing is going to be consistent. It's going to be able to provide you opportunities. There isn't a lot of selling in bullish markets. Now, this is one here, obviously. It is what it is. But you're going to find that by far and large, the better moves when you're in a bullish market are buying. And yes, you're going to have these moves that materialize on the downside. They're real quick, sudden. But if you're not really nimble and you're not covering when it gets down to like this level in here, you end up sitting through all of this. So if you were short here, would you feel comfortable with it reaching that far back up against you? That's what I'm referring to when that tug of war takes place. Versus if you were a buyer and you want to be buying down here, it runs in your favor. Yeah, it's great. But when you have moves that trade against you when you're bullish and inside of a bullish market, you're being trained by me to think, okay, maybe this is just another institutional order flow entry drill or another optimal trade entry. So it's that paradigm shift that takes place when you're trading on side with higher time frame order flow. In other words, you're trading in sync with the higher time frame trend or momentum. Versus you don't know if you're in a bullish market and you're short opportunity. In other words, you're trying to make a move, making money going down when the underlying asset, in this case is euro, if it's bullish, you don't know if it's going to deliver this type of move. And sometimes I don't know if it's going to deliver that either. So I have learned to say it's better for me to focus on one side of the marketplace. I can work both sides, but in certain conditions. And those conditions are when we're near a specific level that I think we have potentially topped. I have not called a top in euro. I've been calling for it to try to trade above that old high. We've been underlyingly bullish euro, bearish dollar. So I'm not trying to pick a top. So therefore, I'm not trying to be overconfident or overzealous about my shorts. If they are forming, I will observe them, but I'm not really participating in them because we haven't seen that topping formation or the likely topping formation that I would feel comfortable with if, in fact, the technicals would support that idea, which I don't see that here. All right, 15-minute time frame euro, and that's that return back and nicely returning into this fair value gap, beautifully delivered. London Open, optimal trade entry, bearish order block, delivered nicely on the downside, attacking sell side liquidity. And then again, this is what I'm referring to, all of this run back up. So all of this run back up, if you're short, I wouldn't want to see that. That's like it goes here, pulls back, institutional order flow. Trades back in here, institutional order flow. Same low. And rallies again. We have a fair value gap in here, pulls back in. What if it rallies higher? What if it clears this buy side liquidity? Then this short here is neutralized because we're in an underlyingly bullish market. And the fact that we had these really clear, obvious retail support levels here where stops are going to be trailed right underneath it, it's just convenient how this really quickly ran down for that and then rejected that. It would have been better if it would have went below here, came back up and gave them their retail support broken turn resistance theory. But you don't see that working here either. So again, until proven with undeniable characteristics and signatures that this is topped, and it has not shown that, we'll have to stay on the side of the marketplace that's bullish because that's where the high probability really resides. All right, so I'm going to take you into the trade I shared on YouTube. I get a lot of emails sent to me, and while I don't read them, my staff tell me that you're getting a lot of emails about this person or that person saying that you're doing this or you won't do that, and you blow the account, and that's why you never show the account again. It's something different, And I watch YouTube. Okay, I watch YouTube while I'm working. I'll listen to YouTube videos while I'm driving if it's people that usually have a lot of things to say, not so much a visual thing. And obviously, I've recently went at it with one of the frauds on YouTube and pretty much exposed them. They ain't talking about trading anymore or doing everything else but that. And the long and short of it is, I wanted to show, because everyone else says it's so easy but they never do an execution, I went in and I did another execution. Now, you all know I'm doing a lot of things for mentorship. I'm producing lessons, videos, the things I have to do to maintain this service. It demands a lot of my time. My personal time, which is whatever I do on YouTube, is none of your business. Okay, so if I want to talk about things or talk towards someone, okay, that's me venting. I don't have Twitter anymore. So I mentioned that my community tab pretty much has become the replacement for Twitter. So it allows me to bark and chase cars. And I just put it out there again to show that most people on YouTube aren't showing executions. Now, there's a lot of people that have learned my concepts, and they are the ones that actually put executions in, stop losses, and their targets are getting hit. And I'm encouraged as a mentor when I see things like that, because everyone else, the mentors themselves, they call themselves, and their students aren't doing executions. They're talking about something that's already happened in the past. To me, that is a telltale sign of really understanding from a teacher that has been able to teach and communicate and transfer information like I have. And this whole trade here, I want to kind of like go into it and give you a little bit more detail, but also cross that bridge between fear and greed and why it might be a factor or may not have been a factor for some of you. Maybe you've seen me do the trade. Maybe some of you were participating in it. Some of you actually reached out to me and said, hey, look, I took that same trade, and you did it through TradingView, the little comment section. Once in a while, I'll get like little memos or notices from people that are following me on TradingView, and it kind of like is like a text feature, like if you receive a text message or a personal message or DM, and they shared their chart and they've marked their chart up before it actually happened. So I know it's real. It's not like somebody say, oh yeah, I took that same trade, and they show me a trade that they just penciled in, after it happened. They're sharing their link and they're saying, look, I had that same thing. It's all marked up right here. And then here it is again, after the fact. So I love seeing that. It only takes a second for me to click on it and see it. Just give them a smiley face or keep going, encouragement. And that's awesome. But I want to go into the details about this little trade here, because this is a bread and butter setup. This is the very thing I talk about on the YouTube channel. Now, obviously, you're not in YouTube content. You're well beyond that. But I kind of want to draw you back to the basics, just for a simple teaching here. We have this low. It rallies up and starts to break down. Now, everyone else would look at this as a sell for optimal trade entry because they're thinking it's topped. We don't think that, or at least that's what I'm trying to teach you not to think as. But this return back in here and then drop back down, it had many attempts to get in here to go lower and break that low. It wasn't showing any signs of that. So I was looking at it on my phone, and I said, let me jump on my laptop real quick and record this because I'm going to take this long. And I was watching this candle right in here. I wanted to see it trade into that. And in the video on YouTube, you can actually see me drop into a lower time frame. And I used a fair value gap. Once it filled it, I just went in long. And the fill is pretty much the same thing that would have been if I would have used a limit order. But I just didn't have the time to be in front of it, babysitting it. I felt very strong that it was going to run above these highs and at least get into that fair value gap, offering me an opportunity to do 20 plus pips. But if it was going to make a run from here to go into that higher high on the daily chart, then I had already had it in mind that I was going to take half off, or a little bit more than half on the trade, and then leave that on to see if it can run for that over the week. But because it's non-farm payroll and the protocols, that's the reason why I took more than half off when it went up into that fair value gap at the mid-figure 2250 level. That's in the recording on YouTube. That's the logic of the reasons why I took majority of it off there, because if it was not non-farm payroll week, I would have not taken that much off. I would have taken off maybe 25,000 of the leverage that was used in that trade, and then taken another portion off at like 2280 or 2275 and see if I can get a little bit more squeeze above and push above that 2265 old daily high. That's what I was thinking at the time entering it. But I showed the framework initially with 20 pips getting up to the mid figure. I showed that as my initial limit, and then I adjusted it and said that I was going to more or less take something off or half off there, and you watch the execution be done, and then stop moved to a point of no harm above the entry, and then eventually it got stopped out, as you'll see. But using the logic of entering in here, that if it goes below here, in your mind sometimes as a trader developing, and you're trying to rush into doing executions before you're skilled in seeing these things pan out, that's the factor that you will encounter when your development is premature and you're trying to execute trades. You're going to have this overwhelming fear and anxiety. Even if you're trading with a little bit of money, you're going to feel that anxiety. That is removed, not in its entirety, but it's removed a great deal if you spend at least 6 months in demo doing the same thing that I train you to do. By buying in here, yes, it could go down here and stop me out. And yes, if it goes down below this low, it could cascade lower and go for these relative equal lows. But that's to assume, again, that the market's made a top. Nothing in here says it's made a top. Even though this is here and staring us in the face, to me, I don't see that as a top because I'm trusting the higher time frame order flow being bullish. And the characteristics is this is an area where everybody's stop was that's long. And it just went right to that level. So what makes this any indication that it's created a top? It doesn't for me. If we go below this low, then yeah, okay, we probably made an intermediate term high. And then here it is. Well, I'll be willing to take shorts there. Well, not there, but at that time. But right now, I'm not willing to take a short. I want to focus primarily going long. So if you go long here, I'm going to speak hypothetically in hindsight because you've seen me take the trade, but I'm going to teach on it here with this frame of mind. If you try to go long here because you missed the ideal entry on optimal trade entry, it trades back into the order block here. That's not a bad trade. That's actually a very good trade. And you're limited in terms of your risk because you know the framework and the structure is we've taken sell side liquidity here with that run. We failed to go lower than that low here, and we're north of this swing high. So when it trades back down into that candle high here, that's returning to a bullish order block. We should see it trade higher, run above these relative equal highs, which have low resistance liquidity run signatures because of the high on the right being lower than that of the left. This is what I teach you. Well, we started pumping through and it got up to the mid-figure, 122.50. And then I took the majority of, or more than half off at that point. Because if I'm wrong because of non-farm payroll week, remember, we do our trading when? Monday, Tuesday, Wednesday, New York open. After that, we don't take any new positions. Like right now, nothing can be entered as a trade if you're going to follow at least the teachings that I'm providing you here. You don't do that because you're trading in a condition that could very easily be whipsaw. It's likely to have manual intervention. That means the algorithm will be overridden by manual intervention. Somebody will go in physically and reprice. That's when it typically occurs. That's the reason why I tell you don't trade on Thursday and Friday of non-farm payroll weeks, because that's likely to occur then. If you want to look for a season when it's going to snow, you don't expect it in July. You expect it in the winter months. Okay. And it's just common sense things, but you wouldn't know these things unless you were taught that. If we are going long here and you're fearful of what happens if I get stopped out and it runs down here, that would have been a better sell than that of the entry here. You can't think that way, folks. And if you think like that, you're creating these what if scenarios that are most likely never going to occur. You have to trust the underlying narrative. You have to trust the higher time frame order flow, and you have to trust the fact that these things hold up. But you have a stop loss for the times when you get it wrong. And I could have got it wrong. I mean, I didn't, but I could have gotten it wrong. But the stop would have done its job. I pay it to do its job. And the price is the risk that I'm putting on the trade. Now, granted, it's paper trade, but that transaction has a loss. I physically feel that, and it's in an account that I'm sharing with you. So if I suffer a loss, you would see it. There would be red there. Okay, but if you're taking these trades and you're fearful of, what if I miss this move? Well, this move didn't happen until this move happened. Now, this move is smaller than this overall drop, but this move was easy. It's really easy. And it was going to a logical level, fair value gap, mid-figure, and because of what? Non-farm payroll week. This could easily turn around on me. That's the reason why I took the bulk or the majority over 50% off there. Again, had it not been non-farm payroll week, I would have not taken so much there. It would have been like 25,000 of the 200 some thousand leveraged on that trade. Whereas like $21 and some change or whatever it was per pip. I would have only taken off the equivalent of $2.50 per pip once it moved 20 pips. leaving the bulk of it still on, working in my favor, hopefully, to try to get to that 2265, maybe 2275, and push maybe to 2280. That's how I would have worked it had it not been non-farm payroll. But because it is non-farm payroll, because that is the reality of where we are in the calendar, I elected to take more than half off there, and then the stop rolled to break even, just a little bit above break even, and that was it, and I let it go. If it stopped me out, I don't care, because the example shows I don't have to be right to be profitable, which is exactly what I teach on the YouTube channel and what I teach you here. And it cancels out so much, or at least it should cancel out all of that negative what if thinking. What if I get it wrong? What if I get stopped out? What if I have 3 losing trades in a row? So what? You're going to have losing trades. I'm promising you're going to have that. But if you don't think like these things are likely to pan out because you're trading in sync with the higher time order flow, and if you're fearful of this turning around, well, that was the whole basis of why I took more than half off there, because this could have happened. I'm not forecasting it. I'm just saying it could happen. So buying long here, as the market was returning back down in, I was going long there, and it's on a 5-minute chart, and you can see my fill there. That was the actual leverage, the 212,399. So it's basically $21.24 almost per pip. That's all it is. And it starts to rally up and runs out on this candle here. When it hits the 2250 level, I'm exiting more than half the position there, and I'll show you that is being filled there. That's how much I took off on that candle, okay, at 2250 and 2 pipettes. So everything I outlined on the video on YouTube, it delivered. I took the majority of the trade off because, number one, I couldn't watch it because I was doing things for mentorship, and it could be this turning point that maybe it doesn't deliver until later in the week. And if that's going to happen, then I'm probably going to see it come back against me much more than I'm willing to absorb because of non-farm payroll week conditions. I can't stress it enough. You know, if I could take you back through time and show you all of my worst case days, they were always on Thursdays and Fridays of non-farm payroll. The bulk of them were then, or FOMC days where I was trying to trade ahead of the Fed and gamble. So those were always the worst days for me, the worst ones. So I've learned by pain and that threshold that I had to cross multiple times for years, and desensitizing myself to not feeling the effects of ego, like I had to have every day figured out. I just simply say, okay, there's 2 days every month. I'm not worried about it. And during FOMC times of the calendar, I'm not trading new positions ahead of that. If I'm in something, I'll leave something on, but I'm not trying to trade a new entry ahead of these types of events, because even though I understand a lot about the algorithm, and even though I have the capability and the aptitude to be nimble in these markets, they still can clean my clock. And I am humbled enough, because of the pain and the money it's taken from me over the years. I'm telling you, you don't do these things, because even though I'm ICT, I can still be ragdolled on those days, because those are the days that manual intervention comes in. That's when it happens. So I basically opened the books for you. When do you anticipate manual intervention? Those times, which is the reason why I teach you to stay out of those times of the week and the month and the year. Okay, all of these specific points are outlined in your economic calendar. They're not surprises. They're not, oh, gotcha. It doesn't work like that. Okay, you can clearly see them weeks and months ahead in advance. You know when the FMC announcement is going to come. You know when non-farm payroll is going to be. You know the day before non-farm payroll. So they're not surprising you. Okay, it's not hidden from you. And ultimately, you can see where my stop loss did get tagged on the remaining balance of 100,000. So that's where it took me out at. Okay, and it moved lower. Did it hurt me? No. Did it hurt my image on YouTube because it didn't go up to where I was trying to get out? No. Now, folks that aren't familiar with what we're doing by taking partials and, funding yourself as a trader that's profitable and consistent is the whole reason why partials are crucial. Anyone that knocks taking partials, I guarantee you they are not profitable traders. Guaranteed. Absolutely guaranteed. And there's a really widely followed young man on Twitter that has that opinion. And I'm of the opinion that he's not profitable. And we'll leave that for another discussion. But the point is this. These bread and butter setups, if you aim for that initially, 20, 25, 30 pips one time a week, and you just do that, and then once you hit it, sit still. Don't do anything else for the week. Feel what it feels like to watch other moves and then wrestle with that engagement mentally. I should take that trade. What if I don't take that trade? And observe and write that down in your journal. What do you feel impulsively about watching the next move after you engage one time? Because it's going to teach you a lot about yourself. It's going to teach you that you're not as impatient, or that you are impatient. It's one or the other. And it'll help you address those issues because you're going to feel it. And no one can be inside you, in your body, feeling that discomfort, or inside your head feeling those what if thinking. Because you're looking at, okay, if I take that long here, it might go up there. But what if it goes down there and I miss that sell? Or what about all this risk? Because you're thinking that stop loss isn't going to be as effective as it would be if it's traded to and stops you out. You have all these unrealistic fears and concerns, and you start thinking about, what if the trade is going to go the other direction and I can make more? And you have all this what if, and you end up doing nothing. And it robs you of opportunity and experience. So you try to find one setup per week that can give you 25 to 30 pips, and you engage one time. And then you sit still the rest of the week with your executions, and you observe. And that period of time, right after you do a trade that works out in your favor, you're going to learn a whole lot about yourself. You're going to feel like, I want to do that again. And the more you feel that I want to do that again, that means that you're suffering from impatience. You're suffering from significance. You don't feel significant in your trading. You don't feel empowered because it's so far between the next opportunity where you feel like you've done something right. You want to rush to get into that next buzz, that feel good feeling. And that's what burns every new developing trader out, and they blow their account. I did the same thing. You feel good when you get it right, and it's like, I guess it's like a drug effect. You want another hit. You want to feel good. You want to get a buzz. You want to feel confident about what you're doing. And even if you don't share it with other people, whether in your family circle or your friends or on social media, you know what it feels like when you get it right. And you feel like, man, I am going to quit my job. I'm going to do everything I wanted to do. It's just a matter of time. I'm going to turn this around. But as soon as you rush to do the next one, you know what happens. You rush to get in it, wanting that next buzz, that feeling of doing it right, and then it runs against you, and then you feel worse, and you can't even recall how good this move felt when you did it right. So that's the reason why I tell you, do this at a modular pace, and then observe what you're feeling and what you're thinking, because it's going to teach you a lot about yourself, and it's probably not going to be something that you want to discover, but you have to, because that's the only way you wrestle and you conquer these demons of fear and greed. You're fearful that you're going to get it wrong, or you're fearful that you got it backwards. Okay, in other words, you're thinking that the bias is bullish, but what it's really done is topped, and even ICT missed it. I have students that think that, and they have wasted years in here thinking like that. I have students in here that literally go against my bias and what I say in these commentaries, and they're habitual about it, and they say that they're contrarian. No, that's stubbornness. Okay, I mean, to me, that's stubbornness. You're going to have to discover that about yourself and then immediately conquer it. But you have to know what these things are that trigger it. And the only way you do that is by journaling it and being truthful and honest about what it is that you're really wrestling with. Because if you feel impulsive, this is what I'm getting at here. If you feel impulsive, if you're feeling fearful about engaging, or if you get something right or if you get it wrong, you need to record what you're thinking. And then also think about what you've recently experienced. Did you lose your job? Did you get reprimanded at your job? Did you just recently get into a car accident? Did you just come over an illness? Are you going through a separation with your significant other? Are you having difficulty with your children? All these things can be used in toxic thinking and in manifest themselves in trading. I have done all of that stuff. I've done everything like that and more. Things I'm not even going to talk about because I'm ashamed of them. But the point is this: we're all human, and you're going to have these things tug of war in your mind, in your emotions about what it feels like before you engage, and if you get it wrong, how you feel, or if you get it right. That's sometimes worse than getting it wrong, because you want to get it again right away. Whereas if you take a loss, you're not in a hurry to take that next setup when you're supposed to be, because you're developing. You need to get in there to desensitize yourself. But if you get a winner, try not to jump right back in again. It sounds counterintuitive, doesn't it? It sounds like, wait a minute, this flies in the face of what everybody else says. Exactly. Bingo. There you go. Now you're getting it. I'm not here teaching everybody else's school of thought. You can see here that the trade did, in fact, reverse on me, but it didn't make a dent in my image. It didn't do anything at all. It showed that I got in at a really good position. I got out at a logical place. It was very close to the high of the day. And my stop was put in a position where the remaining balance wasn't a loss. And I can go on to the next trade. That's what you're supposed to be doing, but not rush to do it, because your initial threshold or goal as a developing student here is you want to hit that 20 to 30 pip one shot. That's it, just one. Because if you can start finding that once a week, you're going to completely disarm yourself and avoid thinking I have to get that 75 pips a week because ICT says he gets it. There's some weeks I don't even get 75 pips because I don't need it. I don't need that. I'd like to look for 50 to 75 pips. That's just a range that feels good for me. I know I can go in and find setups like that pretty quick, but I'm doing other things. I'm not staring at charts all the time. I'm a workaholic because I'm in this mentorship running it, and I'm trying to finish it this year. But I'm going back hopefully next year on the other side of March. Let me throw this in here real quick. Next March, I will be taking that month, the entire month off, because we will be done delivering the content as it's intended. And I'm going to basically not be participating in any email, any post to the forum, no YouTube, no nothing. My wife and I and my family, we're just going to unplug because we've been really put through the grinder here since 2016 with running this mentorship. And in April of next year, I'll return back in that once a week capacity, but I'll be more involved in the daily posting and in conversation on the forum. But anyway, I want to get back to that frame of mind where I can just be more free and do what I want to do. And I'm not always in the charts. I'm not always trying to trade. But 75 pips, this is a high end. And 50 pips is kind of like what I'm looking for as a minimum. But you, as a developing student, shouldn't even reasonably expect yourself to be making 50 to 75 pips, especially if you're a 2021 student. It's unreasonable. It's unrealistic. So I give you a very low threshold goal that I believe that all of you should be able to hit that once you become a charter member. Once you're a charter member and you have all the 12 models, you have everything at your disposal that you should be able to hit that. Does it mean you'll have a losing week once in a while? Yes, absolutely. And that's all part of your continued growth. The real growing happens once you are a charter member and you have all the things that are given to you as a charter member. What you're doing right now is basic training. As long as you're making payments to me, you're in basic training. That's all that is. Once you get the content at charter, then you have to go back through this all over again where you're weak, which is the reason why you keep a study journal. The places in your study journal you have the most questions, that's the place you go back to. Once you become a charter member, go back through those months, those core content lessons, because if you have so many questions there, chances are you probably missed other things I've already talked about in the videos. And when you go through them again multiple times, you're going to swear that I said something new or I re-recorded the video when I didn't. because you're thinking about things without knowing what's in these videos, and you're glossing over it. Much like what I'm doing right now. You're probably listening to this thing, get on to the next slide, get on with it. But I'm teaching you here the lessons that are required for you to become very good at doing this, and what obstacles you're going to have and how to overcome those obstacles. See, on Tuesday, we traded through the old high here, and then it quickly retraced back down in. Went a little bit lower today on Wednesday. Traded through the rejection block of this low. And I'm not convinced yet that we've made a high here either. I like this weekly range. If we get some kind of a non-farm payroll event where it sends the dollar lower, we could see cable, make an attempt, not probably this week, obviously, this is a lot of range, but work towards going to this high. So it might be, over the course of the coming weeks, we could still anticipate seeing this level reached for. Doesn't mean it's going to hit it. It just means that that's what I'm thinking. If we get back above this high, I'm thinking right there. So have that on your chart. It's just basically pulling a weekly chart up and noting the old weekly high, and you'll find out what that is if you do it on your own TradingView chart. British pound versus US dollar hourly chart. Again, you can see we traded back down to the order block here, clearing sell-side liquidity there. On Tuesday, the pound was decidedly weaker compared to euro dollar, which is also the reason why I went long on euro, because euro pound was actually underlyingly bullish. And you can see on your own chart for euro pound, it was bullish because of the cable market being driven lower and repricing it aggressively lower after taking that old high out. They sank this pair, allowed euro dollar to stay consolidated and went higher, which is the underlying premise to making euro pound go up, or at least one of them, because you could keep the cable market consolidated and then rally euro, and that would have been also the same thing. But they used cable dropping and consolidation and slight rally on euro dollar to make euro pound rally. So after sweeping that into this order block there, we bounced in here. We have a small little fair value gap there with an order block. If we drop down, it's better if it didn't do this, but if it drops down in there, that's something I'd be watching for accumulation of new longs. But I like this low, high, lower low, potential bullish breaker. So I don't think it needs to come back down in here. I'd rather it didn't. That's the reason why I said why this should stay open, because I know some of you are thinking, why do you want to see this stay open? Because we have this market structure here. Because we have this low, this high, and this lower low. This is a bullish breaker. So this bullish breaker extended out in time, I don't even want to see it go halfway through that. Like, in other words, find the middle point of that body of that up close candle, extend it out in time. I don't want to see it go below that. And if it went below that, it would be reaching into this. Now, if it goes into this, that's fine because we're still inside this candle. But to me, it's better to leave this open as a breakaway gap, because everybody sees this as potentially topping on cable. And to me, I don't see that. That's just them coming back down deep to take out sell-side liquidity. And a lot of people are afraid to buy it now. And that's the best time to be a buyer, and many times where the market just feels like you shouldn't do it. That's always, in my experience, the best trades, where it just doesn't feel logical to do it, and then the market just starts going in your favor. But it won't feel good doing it, especially as a developing student. And pound dollar, 15-minute time frame. Midnight, we have optimal trade entry here, right in there, with a breaker. So we have high, low, higher high, breaker, trades into it with optimal trade entry at London Open, sells off, turns at New York Open, rallies, and we're consolidating in here. This one here, in this market structure, I don't like any of this. Even on my lower time frame, like if I was trading like 1 minute charts, I would not be engaging in any of that right there, because it's not structured in a way where it's creating imbalances. Because if you look at all of this, look at all this price movement here. You got this run here, and it comes right back down in, hits this. That's the nice one. But then this here, what's it reaching down into? The order block. But there's really no gap there. So I don't like that so much. It rallies above the old high, then trades back down into what? What do you see in here? Nothing. So it routes back up in here. We have a small little fair value gap there, trades back down, take the sell side liquidity out. But the range is too small because 41.75 to 41.65, that's 10 pips. So I'm answering a question, by the way, in case you're wondering why I'm going off on this tangent. The question is how do I know when I'm going to be able to trade back and forth in the same day? In other words, buy and sell, buy and sell, buy and sell, because you've seen examples of me doing that on YouTube where I had limit orders for selling short when I was already long, and then reversing and then going long on a reversal once my short hit its objective. That takes a range environment that obviously this is not presenting. So in a way of answering that question I got by email, and I apologize because I am like near 3 months behind in correspondence. And again, not every one of your emails are going to get answered. Just put it this way. The majority of questions that majority of you send are questions that actually get answered in the natural progression through this mentorship. I know you probably heard me say this before, and the people that are charter members are probably just like, oh man, I gotta hear this again. But it bears repeating because sometimes it feels like you have so much information coming at you and you forget a lot of things, and it feels like you're never going to get it because there's always a new tsunami of information or new content or concepts coming to you while you're developing and you're going through the core content. These questions that you're having are natural, and I'm not going to answer because I would never get anything done. I literally would never get anything done or even have a life if I answered every single question that comes to me that I already know that is answered in a natural progression through the core content and mentorship and or charter membership or just time and experience. So because I've said this multiple times all throughout this mentorship, even before you joined, this is one of those reminders that it comes by being here. That's why it's a lifetime service. It's not you pay for a year and then you throw it out the door. Okay. You paid for a seat to be here, and then you're among my community where you can have ongoing learning and access to the forum where you can exchange and share ideas. And I'll be dropping more information, even though we're done the bulk of the teachings, when we get into next March. There'll still be teachings. It just won't be at the level that obviously you're accustomed to on a month-by-month basis. But there's a small little range in here that's less than 10 pips in many instances. So you can't really cover that much in terms of when you get in and then when you try to get out. So working in a range like this is not, appropriate for buying and selling in the same day. So to answer the gentleman's question that was asking me, what environment, it wouldn't be anything like this because the range already, if you look at what we're doing back and forth, it's not likely to promote profitability buying and selling in the same day because the range is too small. But if the range is operating between, say, 40 to 60 pips, if I have a dealing range intraday back and forth that's ranging back and forth that much because there's a lot of volatility, I can buy and sell in the same day back and forth in that. But it requires at least that minimum threshold for intraday volatility. In other words, I have to see range moves back and forth over 40 pips, preferably between 40 and 60 pips. Volatility has not been that good in recent months, where it's only showing volatility one directional. It just gives you that one move and that's it. And it's not a lot of back and forth. It's just, there it is. And if you missed it, you missed it. That's also why you don't see me doing a lot of examples of it in recent months, because the environment that we're in isn't conducive for that. And it's not something that you should be aspiring to do anyway. That's just me showing off. And while you might be looking at that as a male in here, thinking, yeah, I want to do that too, it's not required to be profitable. It's not required for you to quit your job. It's not required for you to be, wealthy. You don't need to be able to do that to be wealthy. If you do what I'm teaching you here in this video right now, finding 20 to 30 pips one time a week, that's all you need. That's it. In fact, if you think about it, if you just try to do 40 pips a week and figure out what your average earning is, because some of you are actually salary employees, but if whatever your monthly income, or your weekly income rather, is divided by 40 hours, try to scale it up or work towards that as what your pip count is, what your per pip payout is. So say you make $20 an hour, okay? Your goal should be, I want to get to the point where I can trade to $20 per pip. And if I can get 40 pips per week, you've now replaced your job. or match your job. When can you quit? When you start doing that? No, you have to be able to be consistently profitable doing that. So how do you prove that? Well, if you can do a full year of it, and you also build up cash reserves, and you want to have at least 2.5 times your annual salary in cash, not in your trading account, in cash. So that way you're not going to need to make money to live on. And that's how you transition from doing 20 to 30 pips a week. And then where do you go from there? Well, try to aim for 40 pips a week, and then match that to whatever your average earning is per hour at your job. And then consistently aim for that for a full year, and take that money and sock it, put it to the side in cash reserves, not in your trading account. Okay. And then that's how you build up your business model. That's how you fund yourself. There's other ways to do it, obviously, but if you're just going to do it from scratch on a shoestring budget, that's how I recommend doing it. But there's other ways to do it. You can have funded accounts now if you're really good at trading. And that's probably, in my opinion, probably the better way of doing it, because it's other people's money. And if you blow it, then you blow it. And who's going to really know about it? They will. But you're not going to be on social media, hopefully, saying, I've done all this, because you're just adding more of a weight around your neck to be productive and profitable. If you're developing, it's already hard enough for you. So you shouldn't be trying to add more hurdles, okay, or more weight to the bar to lift it because you feel like it's necessary on social media. I mean, the threshold to impress in social media is so low because nobody proves anything. So why even worry about doing it? Feed yourself, feed your family, and build your wealth quietly. Don't draw any attention to yourself. And then you'll find that trading will be easier. But if you start adding all these Olympic level feats of trying to be better than ICT and better than the guys on Instagram, but better than everyone else, nobody's ever going to be fully impressed. They've seen what I've been able to do, and they still can't believe it. So even if you come out of the forest, okay, with your swords raised up and saying I'm conquering everybody and everything, no matter who you are, what you're able to do, you're going to have people saying that you're a fake, you're a fraud, you don't know what you're doing, or you're faking it, and it's not what it is, or somebody else is giving you the trades. This toxic environment this world has created through social media, it's enabled people to, and I realize I'm on a rant right now, but I got to do it, sorry. It's enabled people to speak their mind when their mind is full of nonsense and they're unhappy with themselves, so they want to lash out at other people. So just bear that in mind. When you see these people, they're miserable cretins. They have no idea how to find happiness or success, and they want to just be able to affect you. Even if you respond, that's enough. And I was thinking to myself this morning, I saw somebody sent it to me as a link, and it's a picture of like these greyhound racers, like where they race the dogs, and inside the boxes that they're at, before they raise the door up on it and the dogs start running after, I guess it's a rabbit or whatever they do to make them run around the track, there's a cheetah inside of one of the boxes, and the cheetah's sitting there while the other dogs are just running. And the caption said something to this effect: sometimes when you're asked to do something you're the best at, it's offensive. And it's basically saying, look, you have the fastest cat on land, a cheetah, in a dog race, and you're asking him to race dogs, and he's just sitting there like, really? I'm not even going to come out of the box. That's the mindset you got to have, because all of you are going to learn to be absolutely ridiculous as a trader. You're going to be so accurate and so consistent that people are not going to believe you. They're not going to believe you. No matter how much you do, it isn't going to convince everyone. They're going to think absolutely there's some fraud here, because they can't accept it. You see it and you're experiencing it and you're learning it. And some of you, and it's mostly the young men, you're chomping at the bit because you want to be able to go out there and flex on everybody. Why? Why do you want to do that? I'm going to tell you why. Because you're just like me, because I couldn't satisfy that urge that I still feel as a man getting ready to turn 50 in a year and a half. Well, not even a year and a half, but it sounds better, a year and a half, doesn't it? In a year or so, I'll be 50 years old. And I can't tell, how bad I would love to hear my grandparents say that they're proud of me. So I have that underlying urge to be always proving myself. That's why some of my students will say, I don't know why ICT entertains these trolls, because it scratches an itch that I can never satisfy. And if you have that ingrained in you, I'm going to tell you, even though it feels good the few moments that I get out of doing it, it never fills that void. Because my grandparents, who I really wanted to impress and make proud of me, they were my parents. That will never be satisfied. But I understand that link that makes me act that way. So to cope with it, because I have to cope, I'm a human being, I cope with it by engaging trolls. Most of you be like, I wouldn't even waste my time. And that's right. That's the right way of doing it. But I'm not balanced. Okay. There's a half of me that is highly impulsive. And because I'm obsessive compulsive and I'm bipolar, I have a lot of mental baggage that I have to wrestle with, which is another testimony that this is a gift, because there's no way I should be able to know how to do this stuff from a mental faculty standpoint. Like I've said many times, I'm not a mental giant. I have very, very sharp individuals in this, both men and women in his group. They are very intelligent people. And sometimes I am a little intimidated when they ask me, questions, because I know what they're asking, and I know they're coming from a level of higher aptitude in terms of intelligence. And I know the answer I'm going to give them isn't going to make sense to them because they're highly intelligent. And it doesn't probably make sense at all, but because they're book smart and they're statistically driven, the simple response isn't going to satisfy them. And just like me saying, some of you want to get good at this so you can go out there and defend my name or defend what you learned here, defend your time investment in this. You don't need to do that. In fact, you shouldn't even do it. Let them talk. It's better. I actually built my image with that. That was my whole campaign. Get people talking about me. They come in, they look at the stuff, and then it's a word of mouth. I've never advertised. I'm not failing at this. I didn't fail in my campaign. I never invested in any advertising. So it cost me nothing to promote this whole thing. All of you heard it from somebody else. There's this guy, this ICT. So the young men in here, and maybe some of the young women too, or older women or older men, maybe that you have that itch you want to scratch too, and you just want to get out there and cross sabers with these yahoos that don't really do anything or trade. Think about it like that. Not that I wouldn't be impressed and proud and cheering you on from the sidelines saying, yeah, go get them, Tiger. I would be right there, and I would be trolling the people that you're going after too. I would do it. I would love it. Now, I'm not saying that to encourage you, but I'm saying that, but it shouldn't be your only motivation. But some men need to feel like a barbarian or a caveman, and it's the way we're wired. And if there's a deficit in our childhood or upbringing, which I have made very vocal, even in my YouTube channel, I have areas where I can't fix these things, and they've scarred me deeply. So I have to manage myself and my psychological perspective on myself, other people, and this business. So I do the things that allow me to cope, and none of it is detrimental to me. Sometimes it's detrimental to my students because they think, because I do that, they think they should do that. And that's not the case. And that's the only reason why I've shared my personal experiences, because I want you to understand the motives of why I do what I do and how I respond to certain people. And sometimes I get belligerent and I get downright rude, and I'll speak in languages that, I don't like to reach for, but sometimes I feel like I have to. So in those moments, I am not in control of Michael. That's me with the chains off. And That's not what I want you to aspire to be like. Some of you might think, oh, he's a savage. Oh, he's a monster. He's this. No, I'm unhinged at that moment. That's what I am. I'm letting my ego out. And that is, number one, it's ugly. Two, it's not control. I'm not exhibiting self-control. I'm doing everything I can to get that person I'm talking to come into the stage with me so I can devour them in front of everyone. So my motivation is selfish. It's all about me and doing what I want to do to make them feel belittled because they can't compare to what I can do. So that's what you should not be trying to do. You shouldn't be here to try to be like that. Most of you that think like this aren't going to hear me say this, and you're not going to receive it. You're not going to learn by what I'm saying. You're going to still just do it. Okay, I understand that. But just know that I have put it in record that you shouldn't do it. Okay, just for my own conscience, so that way the other students know that I'm not trying to perpetuate this idea. I'm not trying to create antagonistic people. Okay, I want you all to be prepared in case someone says that you can't trade. I would love for all of you to just politely say, well, actually, here's what I can do. And there it is. And I have students that have done that. I have students that share with me what they do, and I'm absolutely blown away with their consistency. And they're making real money. It's not demo. It's real. It's not a paper trading demo thing. It's not trading view. It's real accounts, and they're respectable amounts of money. And that doesn't happen by coincidence. It doesn't happen by luck. They're doing the things that they learned here. But primarily, majority of the ones that are in my mentorship that are profitable, making real money, folks, they're not trading paper. They're not doing trading view paper trades. They're not doing mp4 demo accounts. They're working with real money. Those individuals credit the majority of their learning and their ability to trade with live funds with these types of discussions and lectures. It's not the wiggles and waggles on the chart. It's not the patterns. It's not the entry this. It's none of that stuff. It's the getting them thinking how they should be thinking and engaging mentally, how to overcome themselves because they're in the way. You're in your own way right now. I was in my own way. And some of you won't ever get out of your own way. And it won't matter how much I teach you. You may know my concepts, but because you have not conquered yourself, you will defeat yourself. And let that sink in for a moment. Because there's a lot of people out there that are familiar with my concepts, but because they're familiar with them, they've attributed that as understanding how to do it themselves. And that's fooling themselves. And hopefully, in their mind, they're thinking they fooled everyone else because they want significance. They want to feel good about themselves. But they haven't reached that milestone where they can actually do it. It's like, again, the analogy I've used before, where you watch a magic trick get performed, and then the magician teaches you how to do the trick. And then think, wow, I know how to do this. And you try to do it, and you can't. And it's embarrassing. And it just adds fuel to the fire and just feeds that whole negative, toxic thinking. So you're going to have to balance a lot of these things. And even when you become a charter member, you're going to think back, okay, I went through 13 months essentially of all this learning. What do I have to show for it? Now, if we had a scorecard on what you have and what you learned and how much of it do you feel that you can discard, there would be such a wide degree of variance across the entire mentorship groups as a whole that would be shocking, because the element of personal, individual, personhood, you as the person, you all came here with something. It may have been mental baggage that was negative, or just absolute positive outlook, and you carry that through the entire mentorship, or you're actively using it as you go through each month. But some of you, majority of you, have some mental baggage that you're holding on to. Someone hurt you, someone harmed you, someone held you back, or you feel like you've been shunned and you didn't get the opportunities that you deserve, that stuff will manifest in the charts. It'll manifest in your trades. It'll manifest in your reactions to your trades. I was watching a young man on YouTube the other day, and he was trying to short the NASDAQ futures. And my wife walked by when I was looking. She goes, "What are you looking at?" I said, I don't know who this guy is. He was just in one of my suggested. It was somebody doing it live, so I clicked on it. Just a morbid curiosity. And as soon as I clicked in it, one of my students, I'm not sure if they're a mentorship student or if they're on YouTube only, but they said, "Bullish order block." And I was like, "Say what?" And the guy apparently is at least from I could tell, he's not using anything that I was trading. I've never seen the person before, but something about kangaroo setups or whatever. And I know it sounds silly, but he had the right idea trying to sell short, but he entered too soon before a fair value gap was filled. And he put his trade on and he had his stop way too tight. And I said, well, it could potentially go up and hit his stop. And my wife walked by and she goes, "Who are you talking to? And what are you looking at?" I said, "This young man's trading right now the NASDAQ futures." And I think then he moved to his stop. Then I said, "He's absolutely getting stopped out right here." And she rolled her eyes. She's like, "You think everybody's going to lose money but you?" And I said, "No, I'll show you why I think that. I ain't interested in that. It's a video game." And she walked away. I know it makes it sound like my wife's terrible, but when it comes to trading, she's really not interested. But the young man ended up getting really emotional, and he was basically being watched by about 60 people, and I was in attendance. And I wasn't there but maybe 20 minutes or so. And I watched it, and I knew it was going to go up and hit a stop. And I was talking out loud, and I said, "It's going to hit your stop. It's going to hit your stop. It's going to hit your stop." So because he entered already, and I know watching him live, he's in his mind thinking, "I'm getting stopped out in front of these 60 people, and that's going to be embarrassing." So he started thinking out loud and basically begging the NASDAQ futures market not to do it. "Come on, NASDAQ, come on, come on." And then started cussing at it. And then the inevitable happened, stopped him out. Now, at that moment, he should have immediately went back in and shorted it again. But because he allowed that negative response to a transaction, and I actually typed in his chat, I said, "It's just a transaction, shake it off." And he responded to me. He says, "Inner Circle Trader, it's not easy to do when you got 60 people watching." And I was like, "I understand. Trust me, I understand." Because I put my credibility in front of all of you each time we sit down. And if I fail, obviously it's not a fun thing. Thankfully, it's not that much, but it's still a mild little pressure that is felt, because when I give you my idea or my opinion, once you have it, it's done. Either I sink or swim. He's doing something in front of people live, and I don't think he's personally prepared for that. But I don't know him. I only watched him one time, but he had all the hallmark signatures to someone that is trying to do something before he's really ready. Because a seasoned trader would not be barking at the market saying, "Please don't do that, please don't do that," because they're either going to be submissive to the idea that they're going to get stopped out and then reevaluate at the moment of being stopped out. Did I get stopped out because my stop's in the wrong place, and this is still something to get short and I'll short it again? Or this is the best thing that could have happened to me because now it's going to go the opposite direction in a strong, convincing manner, and it's best for me not to be in the marketplace. He exhibited neither one of those things that showed a sound signature of experience and clarity. So I'm watching my chart while he's in a little reduced screen. I'm listening to him, and the whole time he's going on about, "Oh, this and oh, that, blah, blah, blah," I'm like, sell it, short it, short it, short it, short it now. Get in there and short it right now, at the maximum pain that this young man was experiencing in a witness of 60 people. And I'm sure you probably pull him up. I don't know his name. Okay, I don't know his name. That's not true. It's Chad. No. Todd, Trade with Todd, or something to that effect. Earn with Todd. That's what it was. Earn with Todd. And again, I'm not asking you folks to go to his channel and say anything mean. I'm not trying to say anything mean about him. I don't want you going or even mentioning anything like I even mentioned, because I don't, like I said, I try to encourage him and try to like get his mind on the next setup. But if you watch his reaction, that was kind of like the whole basis of what I'm teaching here today. Because when you get a trade on, once you execute it and you are in the marketplace, you are no longer in control. Until you push that button, you're in control. Your money is right where it is. It's not going to go up. It's not going to go down. You are in the driver's seat. Once you press that button and you enter the marketplace, you have given control to the marketplace. So you have to be comfortable with the give and take. And if you get stopped out, getting stopped out is a new equation. It's what it is. It's either you stay out and you're glad you were out, or do I re-enter? That's how I look at a stop loss. A stop loss is another condition. It's not terminus. It's not the end of the trading day. It's not the end of the opportunity. It's not a dismissal of the other underlying framework. It is a new expression. This now means this times that, or this minus that, or this plus that. And I have to figure that equation out. And this young man, albeit not as drastic as I've seen other people go nuts over losing, he still was very emotional. And it just took the whole wind out of his sails. And that's what I'm trying to avoid in you all as my students. Because if you put a trade on, accept the fact that you're probably going to lose. But if it doesn't lose, great. But if it does stop you out, is it the end of that trade idea? Because it doesn't always translate to that. You have to look at things on a balanced perspective. You are the human. You probably have moved your stop too tight, and this man used a stop that was too tight and entered too soon. The idea of being stopped out doesn't necessarily mean that the idea is wrong or that you shouldn't go in again. Many times, if you're trying to sell short and you get stopped out, if you find a 1 minute or 5 minute swing low and you put a sell stop below that, let the market take you in. And then you don't have to worry about how far it's going to keep going up against you. But going back in short and then putting a stop above that new run higher, sometimes that could be even worse because you don't know how far it is, because now your mind's clouded by the pain. So you now want to use weakness to get you in. And that was how I first learned how to trade short. That was my way of conquering the fear over it, because on paper trades, I would be losing every time I tried to sell short. When it would hit my stop loss on paper, I hadn't put any live trades on yet. If I put a short on, I'm shorting oats or soybeans or whatever I was trading at the time. When it went above the level I would have a stop loss, I would say, okay, I'm stopped out here. I lost $160 or whatever it would have been. Then I'm going to sell it now where it's at. I'm going to put a stop loss, 3.5 cents above that. So if that's stopped out, then I'm done. I'm mentally blown out. I don't know what's going to happen. So the way I overcame that fear and anxiety was, okay, I don't know how far it's going to keep going up. But if it's going to go down, once it goes down from where it's at, it's probably going to keep going down. And to remove all the anxiety and fear and necessity about where it's going to go on the upside, I'm only interested in it's going down. I'm thinking it wants to go down, but it keeps going up to knock people out. And since I wasn't versed in understanding how far it's going to do that, I just adopted a sell stop below a short-term 5-minute swing low. And if it went down below that, I'm not looking at that as a sell stop run to go higher, because it's already been digging into buy stops. And the narrative is it's taking out buy stops before it drops hard. So I'm including this here because if I could have had an opportunity to talk to the young man, I would have counseled him to do that. But one of the students said, "Hey, ICT, thanks for teaching me how to," and I was like, "Oh man, I just look like I'm hijacking his chat." I didn't want to be a disruption. I didn't want to be a distraction. So I just stayed quiet. And since he was talking about going into another short, I was like, "Well, he's wrong there too." And I don't want to babysit this anymore. I turned it off. And I looked at NASDAQ after the fact later on. And if he would have shorted the second time where he said he wanted to short, he would have got stopped out on that one too. So I don't know if he ever did, but I'm just including this as a real live example of watching someone trade with a retail emotional response to something that takes effort to correct, and how I personally did it, how I worked with myself, and what coping skills and what mechanisms I used to overcome it. And everything I just said for trying to sell short and getting stopped out, if you're trying to go long and you get stopped out, and you get stopped out again a second time, but it still doesn't change the underlying narrative that it's probably going to go up, just look for a 5-minute swing high and use a buy stop above that and let the market take you in. If it just keeps dropping, it's never going to come back up here and hit you. Think about it. Especially if that 5-minute swing high, if you're trying to put a buy stop above that, if it creates a institutional order flow entry drill as a sell there, and it's dropped down from there, if you put a buy stop above that, you probably got a tiger by the tail, and you don't have to even babysit it. You let it trip you. The stop would get entered in at the same time. Good till canceled. Done. Walk away. You don't even need to be in front of the charts. In fact, that's how I started. I wasn't watching the charts. I couldn't do it. But all of these things, I probably gave you a kitchen sink, a discussion where we have all kinds of things in this one today. But I just couldn't get over this young man, being tore up as he was, and thinking how many of you probably are acting that same way in the privacy of your own trading office or wherever you're at when you're doing your trades. And if you are feeling and acting that same way, and how do you fix that? How do you overcome it? And what things you should do to enable yourself to be better at handling it? So hopefully, this one probably won't be marked up high as one of the better mentorship videos. In my opinion, it is, because it's practical. It's real information. It's drawing on experiences that I've watched, and I've also experienced as a younger man trying to develop myself, and what actually worked for me. And that's what you came here for. You wanted to find out what I did differently. And hopefully, I've given you some ideas in this discussion here today to try to flesh out an opportunity for you to correct the things that you may or may not have experienced. Or if you haven't experienced it, it probably will happen in the future when you start engaging and you start trading. And then you'll understand what I'm referring to now then. And you'll want to make a note in your study journal. When I start trading with live funds and I have issues with being stopped out, come back to June 2nd, 2021's lecture. Okay? I promise you'll be wanting to come back to this video. Until I talk to you again by way of the price action lesson tomorrow, be safe, and I'll talk to you on this weekend's commentary on Sunday.